Hello, I'm Natalie Kenway, Global Head of ESG Insight at ESG Clarity. I'm here in the New York office of American Century Investments. Today I caught up with Patricia Ribeiro. She's Senior Portfolio Manager and responsible for the Emerging Market Sustainable Impact Equity Fund. We talked about the challenges of investing in emerging markets from an ESG perspective and some of their key holdings.
The Emerging Markets Sustainable Impact portfolio is a portfolio where we can look for companies that are showing accelerating growth, but at the same time, the businesses are aligned to impact. So it's companies that really contribute on both sides. On the financial side, showing accelerating growth, and then, on the, impact side are companies where we can really quantify impact based on the businesses that they are actually in. There are many, right? Sort of ESG impact is still new in emerging markets. So one of the things that we have found since we started the portfolio is to really gather data. So data is still a challenge. So companies are now really learning and also making a lot of data available. But most of the data that we get when it comes to really being able to quantify impact has really been through engagement. So you really need to really do the work, engage with the corporates, ask many questions, and frankly, really help them understand why we're asking the questions, why we need that type of information. So that has been, I would say, the biggest challenge is sort of, the data availability as well as corporates understanding why we need that kind of information. There is a big range of financials within the portfolio. As I mentioned, some of them are really financial institutions or banks that are a lot more focused on SMEs, so really lending to that small business, right? And we also have companies that are fall into that financial, sort of more on the financial side, but it really focus on more of that gender equality. Like, for example, we have a bank in Indonesia, BTPS, which is really focused on more lending to women. We have Gentera in Mexico, that's also lending, really the focus is really lending. Those are all micro sort of lending, mostly to women. Where obviously it's difficult to find opportunities for women that have very small businesses and being able to have access to some financing. Those are some of the exposures there. We also have some larger banks that have sort of focus on part of their business. They're focused on that smaller SME space, growing internet banking as well. So it's a broad range of financial institutions, but all of them really having a focus to really make financials in general, sort of financials or lending or mortgages more accessible to the small, less, let's say, lower income sort of part of the population in emerging markets. I think what this last couple of years and the whole COVID situation, the pandemic has done to EM has really exposed some areas that need a lot more focus need to be done by governments as well as corporates. For example, healthcare is being an area that we can see that in general, but certainly some countries even more than others, we can see that healthcare has not been an area of focus for investment in EM. That became very apparent during the pandemic. Mm-hmm. So that is an area that we would like to see more happening there. Infrastructure is another one, right? Sort of building more schools, hospitals, for example, would be an area also that we see that there is a lot that needs to be done in emerging markets. So as we move forward and we see more, investments in EM, in, as I mentioned before, sort of green energy, and then infrastructure, sort of IT in general, right? So bringing more technology to help them lower their costs in order to offer more affordable products, for example. Those are all areas that we're really looking to see that we think that the benefit of those kinds of investments are actually going to start to really show through obviously their financials, which obviously is what we're looking for here as well. So engagement, as I mentioned, is really, really important in emerging markets because of obviously going after, looking for the data, right, to be able to really quantify impact for each one of the companies that we analyze and we invest in. So engagement is always important. So what we're really focusing on every time we engage with the corporate is first and foremost to get the data, to really be able to get the data, also understand what are their commitments in terms of expanding their footprint in parts of, in more impactful areas, let's put it that way. So that's very important. But then as we move forward 1 year after next, engagement also becomes an opportunity for us to check to see if the companies are actually delivering on their commitment to improving towards the more impactful part of their businesses. So what we want to see is that the impact portion of the business, if not all of it, is actually growing over time, right? Where is their CapEx going? And then being able to check with them as we continue to engage to see if they're actually delivering on what they committed initially when we first engaged with them.